Lately, I've been getting a ton of calls from buyers interested in buying a foreclosure property. They've seen all those flipping shows on HGTV, and they've gone to some of those websites that show just tons of foreclosed homes available, all at prices that seem too good to be true, and they are stoked. They're all excited about getting a great bargain on a bank-owned home, and they're ready to start seeing some of them in person. And there are a lot of benefits to buying a foreclosure property, but there are a lot of misconceptions too. Luckily, I've sold a whole lot of REO homes in my time, so today I'm going to tell you what you need to know about buying a bank-owned home. Welcome back. I'm Stephanie Frost, and today we're going to go over some of the most common misconceptions that people have about buying a foreclosure property. And let's just start with finding a foreclosure. I get calls all the time from people who've been to some website who shall remain nameless, even though we all know who they are, and they've seen just a ton of really cheap foreclosures listed. They usually don't list an address, so I get calls all the time asking if I can track them down. You know the drill. Hi, I saw this foreclosed house on that famous website. Yeah, it's 3,500 square feet on 5 acres, and it's on 35th Street, and it's priced at $50,000. But there's no address. Can you find it for me? And the answer to that is almost universally no. Because most of the homes listed on those sites are actually what we call pre-foreclosure homes, which sounds really similar, but actually it's not the same thing at all. Or at least not what you're thinking when you say foreclosure. When a home's in pre-foreclosure, it just means that the bank has filed a notice called a lis pendens that announces to the world that they are starting the foreclosure process on the home. Usually this happens when the homeowner's missed a couple payments, so the bank is formally putting everybody on notice that unless they get paid up, they will be foreclosed on. And usually what happens is that the homeowner catches up their payments, and the lis pendens gets cleared. Now if that doesn't happen, and the homeowner stays in arrears and still doesn't make the payments, then the bank will actually foreclose, which can take anywhere from 8 months to a year or more. I've actually seen foreclosures sit in the process for 2 and even 3 years. Next is the idea that you can buy foreclosed homes for pennies on the dollar. By the time a bank-owned home hits the market for sale, the bank has already lost a ton of money on it. A, the homeowner had stopped making the payments. B, the bank had to pay a lot of legal expenses during the foreclosure process. And now, C, they're paying the bills for the electric, the water, the gas, the lawn care, HOA dues, property taxes, whatever. They're going to try and recoup as much of that as they can, so usually a foreclosure would be listed at or near market price. The bank had the home appraised before putting it on the market, so they have a pretty good idea what market value is, and if the home's in good shape, there's just no reason for the bank to steeply discount it. When you do see a foreclosure listed at a big price discount, it almost always means it has some kind of damage, and then the list price is set taking those repair costs into account. So if the repair cost came to around $20,000, you're likely to see the home listed around $20,000 or so under market. Another misconception about buying a foreclosed home is that the bank will give you a huge discount for cash. No. Banks are all about the bottom line. Yeah, banks love cash offers just like any other home seller does. But they're not going to slash the price just because a buyer has cash. If 2 offers come in and they're both pretty similar on price, but one's cash and the other one's financing, yeah, they're probably going to go with the cash offer. It's a simple deal, it's clean, with no financing or appraisal contingency to worry about. But if the cash offer is $10,000 or $15,000 less than the one with the financing, guess what? They'll probably go with the financed one, even though it's more of a risk, because the extra money makes that risk worth taking. Like I said, it's all about the bottom line, baby. And the last misconception is that you can't buy a foreclosure property with an FHA or VA loan. And I'm not really sure where that one came from, but I have so many people tell me that it's just crazy. You absolutely can buy a bank-owned home using an FHA or VA loan, as long as it's not a complete fixer-upper. The home has to be in sound condition with no health or safety issues. Now, I've been in a lot of foreclosed homes that have the appliances missing, no cabinets in the kitchen, even smashed toilets and ripped up floors. And you're not going to be able to finance those with an FHA or VA loan because they're not considered habitable. So now you know a little bit more about buying a foreclosure property. If you have any other questions about buying a bank-owned home, just drop them in the comments below. And remember to like and subscribe because I do this every week and you don't want to miss anything.